Welcome to the world of decentralized finance. Bloomberg's covering all things crypto. The people, the transactions, and the technology. Bloomberg Crypto, Tuesdays.
So you've got to explain this one to me. What does it mean when the White House says we're watching markets carefully?
It means they have a Bloomberg.
I've seen the Bloomberg.
They have.
I've been in and seen it.
Lots of Bloombergs. Lots of Bloomberg. Lots of Bloomberg. Lots of Bloomberg. Lots of Bloomberg. Lots of Bloomberg.
I've seen the Bloomberg. I've seen the Bloomberg. I've seen the Bloomberg. I've seen the Bloomberg. What does it mean? What does it mean? What does it mean? What does it mean? What does it mean?
It means they have a Bloomberg.
Everything you need to get set for the start of U.S. trading. Bloomberg The Open with Jonathan Farrell. Drilling down on the numbers and preparing you as only Bloomberg can. Weekdays on Bloomberg.
Autodesk slumped as much as 10% on Wednesday before pairing losses. Still, it was the worst performing stock on the Nasdaq 100. This after it cut its full-year billings outlook. Analysts say demand for multi-year contracts fell as customers preferred one-year contracts. That's the story of Autodesk. They want to move to annual renewals. But it's also the challenging macro environment. Fortunately, Autodesk CEO Andrew Anagnost is here with us. So I guess the question at this point, Andrew, is why? Why are customers behaving in this way? What are you learning from your earnings report this season?
Well, first off, we're learning that the business is highly resilient, it's highly diverse. So we're seeing a lot of great outcomes from the diversity of the business outside of China and Russia. But we're also seeing sensitivity to currency fluctuations. We saw that in the quarter, we see that moving forward. But we're also seeing softness in Europe. And like you said earlier in the introduction, one of the things we're trying to do is we're moving our customers away from paying upfront for multi-year contracts to buying multi-year contracts that are billed annually. And when you're entering a period of uncertainty, people start to conserve cash. And that's what you saw with regards to the billing guidance. And I think a lot of the reaction you saw to the stock wasn't really about what we're talking about in the next quarter. It's about some of the signs that we were projecting about next year.
Yeah, talk about those projections, though, because our Bloomberg intelligence analysts, many of analysts out there, sort of talking about you were very optimistic back in 2020, almost perhaps too optimistic, setting yourself grand targets that then, due to macro, maybe due to micro, you're having to pare back from. How hard is it in this environment to forecast for the next year, to forecast out further than the next year?
Yeah, remember, we were optimistic before the pandemic hit. And certainly we actually performed incredibly well through the entire pandemic. But really, what's really making it hard right now is the unprecedented volatility we're seeing in currency exchange rates. I mean, we signaled next year that there's probably a 5-point headwind on our revenue, our as reported revenue, just from currency headwinds. And also, look, the uncertainty in Europe right now, one of your earlier speakers spoke about the fact that Europe's not getting enough airtime. I would tend to agree with that. We're about to head into the Russian winter there, and that could inject more volatility and more concern into our end markets and into other people's end markets as we move forward. So it pays to be cautious as we kind of get through this winter season and head into next year. But currency fluctuations make it really hard to know where things are going to go, and also some of these concerns with regards to energy costs in Europe are affecting some of our biggest customers.
Talk fundamentals here, though, because almost an FX conversion is in some way technical, but really, how bleak does the economic outlook look in Europe? And do you have to start pivoting away, start deciding that you're going to change up your business, look at the costs over there, look at the way in which you thought you would penetrate Europe more broadly?
Absolutely not. Yes, because you're right. FX is a technical thing. Constant currency-wise, our business looks a lot stronger, and Europe continued to grow. It just slowed. All right, and I think it's important to recognize that Europe will continue to slow. However, here's what's important. The customers who are using our products are working on critical parts of the economy. They're working on buildings, they're working on infrastructure, they're working on manufacturing. They need these products to complete what they're doing. And in tough times, what they do is invest in greater digitization. And what we want to do is partner with our European customers, our American customers, our Asian customers to help them digitize more effectively in a world where they're frankly telling us they have capacity problems, labor shortages, material access shortages. They have more business than they can actually execute on right now. And I think that's what we have to pay attention for the long term.
Hey, Andrew, I think it's worth reminding the audience, right, what Autodesk does. You guys make software for architects, for big construction projects that helps with design, and I know you want to move into other areas. That leads me to M&A. M&A, are there options for you there? I know there's some chatter in the market about some private names, some ArcGIS makers. Esri is one. Have you tried to buy a name like that? Could you buy a name like that?
Well, we never comment publicly on M&A, but what I will say is we've always been an acquisitive company, and we're super interested in growing adjacents around our business. We want to fully connect design and make together in the cloud. So we're always looking at things that lean into the future of where our market's going. So look for us to continue to be acquisitive. Valuations have reset. They reset quite a bit this year, so we were less acquisitive than usual years. But look for us to get back to our normal levels of acquisitiveness as we move forward.
Hey, another big story this week, HP cutting up to 6,000 jobs over the next 3 years. I know that's on the hardware side, but you know, in terms of financial discipline, in terms of reacting to the macro picture, what cost cut measures, what discipline measures are you taking?
You know, the good news is we've always been really disciplined heading through this entire cycle. We never tried to get over our skis in terms of investing for the future. We've tried to invest prudently, strategically. We've taken adjustments as we went along. If we found ourselves building up headcount where we shouldn't, we adjusted as we went along. We've always done small adjustments. So we feel that we're in a really good place, that we can prudently move forward. We're going to continue to invest. And if there's a problem, we just turn off the hiring spigot. Okay.
Autodesk CEO Andrew Anagnost, it's really a pleasure to have you with us. Thank you.
Pleasure.
Coming
Thank
up,
you for having me.
Elon Musk is quoting himself through his tough Tesla days to justify his current Twitter strategy. We'll talk about that next. This is Bloomberg.
Shake, our love will remain. Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
When U.S. jobs numbers are released, Bloomberg brings you crucial data at terminal speed and instant expert analysis. Nobody covers jobs day like Bloomberg.
Welcome back to Bloomberg Technology. I'm Caroline Hyde in New York. Ed Ludlow, he's over in San Francisco. And Ed, just talk to us once again, Elon Musk, pulling out another rabbit in the hat in terms of the Twitter saga. What's he doing now?
Well, everything we've talked about has been so focused on the company, the layoffs, how the company's structured. But what about the platform, right? He tweets on Wednesday, the day before Thanksgiving, that activists that he appears to have had an agreement with have reneged on that bargain, on that deal, which was part of his reasoning for forming a moderation council. Go back a few weeks, he talks about this moderation council being a wide and diverse range of voices who would make basically content moderation and policy decisions. Now, the reason I bring that up is that some key things have happened in recent days, right? And you think about the actions that have been taken. He said that he would not reinstate President Trump's Twitter account without being informed by this moderation council. November 18th, he tweets the poll. You see that on your screen. The majority of respondents vote in favor of reinstating Trump. So on the following day, the 19th, he does reinstate Trump, though Trump says he's not interested in returning to the platform. He's sticking with Truth Social. Fast forward, November 22nd, present day, he tweets. Now, what's not clear, does that mean that Musk is done with the moderation council and that idea is over? Or does it mean it's been compromised or undermined by what Musk calls activists? We don't know who these activists are specifically, but it's an interesting question because now what we're starting to see, Caroline, is platform decisions, not company decisions, but things that they impact your and my ability, the audience's ability to use the Twitter platform.
And let's just talk a little bit also about how he uses the platform himself, because Ed, it's taking a lot, it would seem, Elon Musk, of his own advice on Twitter at the moment when it comes to his management style of Twitter. In a latest column by our Business Week friend and colleague Max Chafkin, he writes that the new Twitter CEO is impressed by points that he himself once made previously as the Tesla CEO, of course, which he still is. Bloomberg's Max Chafkin joins us now to explain. It's a really amusing article, but you're sort of poking at something that is brutally real, that he sort of keeps getting sense of self-inflation by the wisdom he's given in previous years.
Yeah, in the article I focused on what's kind of a funny phenomenon that anyone who follows Elon Musk will kind of recognize, which is there are these fan accounts that do nothing essentially but tweet quotes from Elon Musk, and Musk has a tendency to respond to those in the affirmative. So he'll see something that he has already said and sort of respond exactly, or great point, or whatever, which is pretty funny just as a behavior. And who knows, maybe he's doing it in part as yet another kind of troll. But I think it's interesting because as Ed is talking about, we are seeing this gigantic, very large social network. He paid $44 billion for this thing, borrowed a very large sum of money, and so many of the decisions are coming down to basically the whims of Elon Musk, where he's, deciding whether or not to ban or unban people based on, it seems honestly, how he's feeling at the moment. And we're also seeing a situation where the circle of advisors seems to be very small and seems to, mostly consist of people who are basically telling him what he wants to hear. And when you back away from Twitter, you see that Elon Musk is also running, a very large electric car company. He's also a major defense contractor. And you have to wonder, people who work at those companies have to be asking themselves, why is he spending so much time, talking, for instance, to these kind of like wannabe talk show hosts, to these right-wing influencers, to these meme accounts. The other day he was tweeting with something called Cat Turd, which is like a, right-wing memer. It is not necessarily the behavior that you'd expect from somebody who's taking a rigorous or serious approach to running, a social media company. Instead, it's somebody who's treating this basically like an influencer. Yeah. He's playing to the crowd.
Yes. Max, you ask at the top of your column, reality distortion field, anyone? Talk to us about that reality. I mean, as journalists, we've come in for criticism from Musk about how we've covered his Twitter takeover. But what we've got to go on are the tweets that he makes. What have you learned from Musk's tweets since October 27th, 28th, when he closed the deal and owns the company?
Well, a couple of things. One is, the reality distortion field, that cuts both ways. And I feel like over the last, 5 years or so, as we've been talking about Musk, a point that, lots of people, including myself, bring up all the time is that he's an amazing marketer. And this sense of like a different reality, the sense that anything is possible, that stuff has all really worked to his advantage and has allowed him to build, the largest, most valuable automaker, one of the largest companies in the world, pretty much against all odds. And I think what we're seeing is kind of the other side of the coin here, where he's in this what feels like a very narrow world, right? He's sitting there reading the mentions, and Musk's point, right, that the journalists are out to get him, or the other day he was accusing the Associated Press of being part of the far left establishment. It's honestly pretty hard to know how seriously to take that stuff. It feels like it's mostly just about trying to juice engagement for Twitter. And as Twitter has continued under Musk, he's been posting these charts, right, where they gained a million unique visitors over the last week or something, and which is kind of cool, but it feels like this may be very short-sighted.
Max, we always like your long-term perspective. Thanks for bringing it. Bloomberg Business Week columnist Max Chafkin there. Meanwhile, look, one of the things that we're all noticing is the employee exodus at Twitter has been raising concerns about diversity at the company. Lots of pictures circulating of, far more male influence left building with Elon. It's a problem, not just for Twitter, but the tech space at large, of course. And we want to just look at the metaverse now. A new report says women are spending more time in the metaverse and are more likely to spearhead initiatives in the next generation of the internet. But men still hold 90% of the executive positions at organized, shaping this emerging market. Now, the report by McKinsey says, quote, women are still locked out of leadership roles. Key to establishing an inclusive metaverse. Women hold just 8 to 10% of leadership positions at organizations driving metaverse standards. For more, we want to get into all of this with Savannah Day Goins, founder and CEO of Women X Meta, which aims to place more women at the forefront of Web3 technology. And Savannah, what's really interesting is we went to our audience and we put out a poll and said, A, do you worry about a lack of diversity in metaverse? Do you think it's going okay? Or why should I care? Most said, why does it matter? Tell us, why does this matter that it's diverse?
Because I think if you look at the history, women in particular and people of color have been at the center of innovation, yet they don't hold those leadership roles. So if you don't have those voices at the table to make sure that that build has all of the inclusiveness and richness that is offered by innovation and technology, then you're missing out on that opportunity.
How are you already seeing that reflected in the very first innings of what's being built in Web3?
Well, I think that there are women and there are people of color here, but we don't often get the highlight and the spotlight. And I think that that is sort of damaging in terms of how you think about where we're headed in the future, the democracy that was promised in Web3. But we're already seeing that even when you look at AI and other types of technology, it isn't being fed properly to reflect the diversity of the people that are going to be consuming it. So it is necessary to have that innovation at that conference and at that table.
Hey, Savannah, I love what you just said about different types of technology. If you allow me, I just want to draw on some of my reporting experiences of the last few years. I was reporting on self-driving, and I had a conversation with Aisha Evans, the CEO of Zoox, about this very topic, and she made a very simple point. They're designing a product, right? It is a future product that doesn't exist now, a fully self-driving vehicle, no steering wheel, no pedals, but her point was very simple. If you're designing something that is for people of all genders and creeds, you have to have those people involved in the process. Otherwise, the product doesn't reflect your market audience. Is that same principle applicable to the metaverse?
Absolutely. It's the same kind of ideal about technology and future-focused sort of living, working, and playing, right? So the ideas are generally the same, that if you want everyone to participate and you want to have a profitable product, then you make sure that everyone has a voice in that so that you actually are a company that can thrive in the next generation.
So what do you want Meta and companies like Meta to do, Savannah? You know, Meta dominates the market for virtual augmented reality headsets right now. They're kind of the real world manifestation of the metaverse. What can they do to solve this problem?
Well, I think it's pretty simple, that you just need to do an outreach to those large groups of people who are sitting here waiting to actually participate. I think what we look at is Web3 is already starting to prove that there are individual entrepreneurs who are out here innovating and creating for the next generation. So if you want to participate and you are not already in Web3, then you're going to have to reach out to the people here who are building and who are creating. So Meta isn't just there as the only company that is making a difference here. It's actually some of the independent entrepreneurs who are.
We did see, particularly perhaps in the NFT space, women coming together. A lot of it was felt celebrity endorsed in some way, but coming together and trying to say, let's build. In that way, it was like art that's reflective of women. Unfortunately, I think a lot of the art that got made was basically hot women, which I don't think is actually all that inclusive. But I'm interested in what you think can be done in the here and now that stops, for example, when Apple first released its health app, there not being a period tracker. Like that was sort of an evidence in that particular form of Web 2, where a lack of female engineers in building the software had an impact. What's being lost now and what is more optimistically being built by the women and the people of color already at the table?
So I think what's being missed now is that the opportunity to actually have a very expansive idea of what the metaverse can be. Because I think what we often look at is just the technology, but we don't think about how the technology can actually solve century-old problems, right? And I think, like, for example, we have a healthcare system that is really crippled, right? And if we can find ways to actually look at it across the globe as to how everyone is innovating and sort of bringing that together into how the metaverse can be used to solve that sort of problem, that would be fantastic. I actually think that when you think about how women participate here, they don't really want a casual sort of hyped, focused opportunity. They want to really deeply be engaged, whether it's about healthcare or whether it's about the way that they live and they exercise. They want everything to be lifestyle and have real user experience here. And that is what women bring to this. And I think with respect to how you thought about the art, and you mentioned NFTs, I think the people who are artists really want to reap the benefits of actually having built something that people appreciate. And in previous generations, once they sold their piece of art, they never really saw any benefit of that later on. And so the NFT gives them an opportunity to actually reap that benefit for many generations to come.
An art that is more diverse in and of its very function and form. We want to thank so much WomenX Meta founder and CEO Savannah Day Goins. Thank you. Have a wonderful Thanksgiving. Sticking with the metaverse, thinking about actually NFTs and Thanksgiving, Ed. I don't know if you saw that Macy's is doing its first ever NFT parade balloon. Basically, right here, right now, you can go on and vote what you want this non-fungible token element of a balloon to look like. And then it will be a reality in real life come 2023, Ed. It feels extraordinary timing to be doing this, but I'm kind of hopeful that these sorts of brands, very old brands, are still very much focused on the digital and the here and the now.
Macy's parade is a mainstay for a lot of households. They're splitting this audience. I don't know which one I'm tuning into, but wow, yeah.
Meanwhile, coming up, we've got so much more to get ahead of our Thanksgiving turkeys. The case for Bitcoin we're going to discuss going forward and how regulation will shape crypto markets. This is Bloomberg.
Hydrogen has a very special place in the universe. It's the first element on the periodic table. It is the most abundant element in the universe. And when clean energy advocates think about what can we find which would be as easy to use as fossil fuels, they think about hydrogen. The fuel that will, when burned, only produce water.
We like to imagine that if we just built enough of these and these, we could ditch fossil fuels and save the planet. Unfortunately, it's not that simple. There are some things where you just need a good old-fashioned combustible fuel. Now, startups around the world are betting that hydrogen can become the fuel of the 21st century.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
Bitcoin's hash rate is at an all-time high, and that is a real indication of the security of the network. On Ethereum, we're seeing the total value staked at 24 billion. That is an all-time high. So we think the infrastructure is working beautifully.
ARK Invest's Cathie Wood justifying recent investments that she's made in Coinbase, in crypto, and she's sticking with her prediction that Bitcoin will hit $1 million by 2030, all, of course, despite the current furor around the fallout of FTX, of Sam Bankman-Fried. Joining us now to discuss all of this, Elise Killeen, founder and managing partner at Stillmark VC, who invests in Bitcoin-related companies. And to that end, Elise, how much has your world been overshadowed by what currently is unfolding with FTX, which is sort of a centralized part of the decentralized future and hope? But I'm interested whether you found an uprooting of your world too.
Caroline, Ed, the biggest lesson here is that the value is in Bitcoin and self-custody and not crypto. And that's a lesson that we get in every bear market when the tide goes out. So as long-term equity investors, Stillmark is focused on the accrual and build of sustainable value and enterprise value specifically. And that hasn't changed in any fundamental way. Instead, I think what's happened here, I hope the silver lining is that fraud and dishonest narrative has been washed out, which is necessary for the ecosystem to advance to the fundamental questions of what we're all doing here and why Bitcoin is important.
Well, Elise, let's get to that fundamental question. I always keep a Bitcoin chart handy, as one does. And, go back to November 8th, November 9th. That's where the sort of Sam Bankman-Fried contagion, look at the far right-hand side of your screen, like that's where it happened. But between June and October of this year, we've traded sideways on Bitcoin. What is the fundamental driver of this cryptocurrency long term? What gives you the faith? What gives Cathie Wood the faith that it will reach prior highs?
Of course. So first of all, Bitcoin fundamentals are intact. What's historically been important for Bitcoin is adoption, of course, and the expansion of Bitcoin's utility set, and that is all progressing at an incredibly rapid clip. We saw Kathy Wood note that Bitcoin's hash rate is up, meaning Bitcoin is increasingly secure. And in addition to that, we're seeing Bitcoin holders become more sophisticated. So, as an example, after the FTX collapse, there was a spike, a peak in the sale of hardware devices that can allow Bitcoin holders to hold and secure their own Bitcoin. Something notable about this bear market also from a Bitcoin market's perspective is that we see less volatility than we did in the last bear market, which is an indication of an increasing level of sophistication in market participants, and of course also reflects higher trading volumes in contrast to the prior bear market.
What I'm interested in is thinking more about the ecosystem. You say it's getting built still at a very quick clip. What helps or hinders right now? It's interesting that in the state of New York, Kathy Hochul, the governor today, is sort of talking about a moratorium on crypto mining, and that seems to be explicitly more about a proof of work rather than proof of stake and just basically energy efficiency here. But how much does that hinder, perhaps, the overall focus on hash rates, on Bitcoin as a process, and indeed building around it?
Well, that's a very interesting point, because actually that was one of SBF and FTX's pet lobbying memes, which is that proof of work is something that is inherently a malevolent activity. But of course, we know it's necessary to be able to secure a decentralized ledger like the Bitcoin ledger. And in addition to that, we know that proof of work has quickly shifted to relying on sustainable energy sources. And in fact, I think it offers the opportunity for other industries to take an example of what can be done in adopting sustainable energy sources, which of course also have the capitalistic benefit of being very cheap, and miners compete for cheap energy. And so a note here on one of the other benefits of fraud and dishonesty being washed out of the system to some degree is that FTX leveraged their novel and native token FTT to boost their assets, and likely as collateral to access loans. And with that money, they created sort of a really quick scaling in both their size and in their power and perceived authority, including in front of regulators. And so what they did with that was try to impugn often the virtues of the ecosystem, which is Bitcoin and proof of work. And so I hope that by seeing or finding that some of the leaders that regulators might have felt trust for, seeing them, their operations be made transparent, and having dishonesty or misdirection revealed will allow regulators some time and space to ask the hard questions that lead them to better sort of discovery, understanding, and truth.
Okay, Stillmark VC founder and managing partner Elise Killeen, thank you. Coming up, Amazon's plan to help the movie theater industry. This is Bloomberg.
While Teslas and the like make for good headlines, the reality is that even if every car on the roads today went electric, it wouldn't be enough to curb global emissions to avoid catastrophic climate change. Greenhouse gas emissions from transportation account for about 29% of total U.S. greenhouse gas emissions. So what about the other 71%?
Buildings across America burn fossil fuels to operate. What we want to do is make that all electric. Instead of burning oil and gas to give us the energy and electricity we need, we want to do 100% clean energy, all electric. We want to turn buildings into Teslas. Just like a Tesla or an electric vehicle is all electric with no fossil fuels, We want to do that with our buildings. And if we can do it in one building, we can do it in all buildings. We'll reduce 30% of U.S. greenhouse gas emissions.
From the world of politics to the world of business. Balance of Power with David Weston. News, analysis, insight from and about politics power players. Weekdays. This is Bloomberg. Why do the biggest names in business choose Bloomberg?
That is a great question.
It's a great question.
Great question. Great question. Best question I get all night.
Bloomberg. Top experts. Great questions.
Going viral today is a Bloomberg scoop on Amazon's big plan for its content budget. Well, we've been making TikToks about it because Amazon will spend more than $1 billion a year to produce movies, Ed, that will release in theaters, and the largest commitment to cinema by any internet company, according to sources. Now, that would be, what, 12 to 15 movies per year, and the news sent AMC, Cinemark shares powering higher because Amazon has been somewhat of an ally to these theater groups, while other streamers like Netflix have sort of struggled with a strategy to release content on their service in theaters or indeed simultaneously between the two. That said, though, of course, Netflix actually releases dozens more movies a year compared to what Amazon produces, but Amazon did like to get into theaters. Remember when it first acquired movies and film festivals, eventually earning Academy Award nominations for The Big Sick and for Manchester by the Sea. It then went on, more recently, to buy film studio MGM. And despite declining ticket sales, filmmakers, Hollywood veterans, talent representatives are all pushing for media companies to embrace theaters. And Ed, I really think this is evidence of their commitment to MGM and the fact that people perhaps do want to consume movies in different kinds of ways.
Remember when Amazon bought MGM, key names for MGM left, producer Jackie Lopez in my ear, Manchester by the Sea, but I can't really name another big hit from Amazon. I did love Rings of Power. That's a TV series, right?
Yeah.
Interesting to see what happens.
Yeah, the fact that they're doing this two-pronged approach now. Meanwhile, of course, Ed, that does it for this edition of Bloomberg Technology. And, of course, we're taking a break on TV for Thanksgiving, but follow us on social, hey?
Yep, and wherever you get your podcasts, this is Bloomberg.
So what happens is that we create some icons, we call them tags, and they have a signal within them. And when you stare at that, your eye responds to it in a particular way. The way in which that eye response occurs is a signal that we pick up on the visual cortex of the brain at the back of the brain. So the sensor is looking for the signals we create here that come through the eyeball, through the brain, and then onto the visual cortex. Once we've got it there as a signal, we can grab that, we understand what that signal looks like, and we can turn that into a command for whatever we're trying to control. There's multiple places where we think this technology can be applied, perhaps in, I don't know, driving or commanding unmanned ground vehicles or unmanned naval vessels, perhaps providing menu selection and control within a control room environment, maybe in a nuclear power station. All those kind of things are perhaps in the bailiwick of this technology.
Watch Bloomberg Surveillance Early Edition for the news you need when you need it.
I'm Matt Miller with Kaylee Lyons in New York and Anna Edwards in London.
Australia's central bank raises interest rates twice as much as forecast.
Then surveillance for in-depth analysis.
Alongside Tom Keene and Lisa Abramowitz, I'm Jonathan Ferro, the RBA front and center.
How does Japan get away with not raising rates?
Can it sustain its normal at a time when everybody else is facing a very different reality?
Bloomberg Surveillance. Be informed. Be prepared. Be ahead of the game.
Every Friday with 30 minutes dedicated to fixed income, I'm Jonathan Ferro. This is Bloomberg Real Yield.
Be
BSO Now is your online home for weekly Boston Symphony Orchestra and Boston Pops performances. See new concerts that go behind the scenes, plus acclaimed archival concerts. Visit bso.org/now, where the music plays on. BSO season sponsor, Bank of America.
So what's the best investment advice you've ever been given by anybody?
The compound interest, the compounding of returns is an incredible miracle of business, finance, and human existence. Everything you learn is additive every day, and if you keep at it and don't quit, it's an incredible miracle. And it's not just interest. It was always said about compound interest returns, compound business returns, compound human returns. They're all very additive because you learn every day. And if you keep at it, it's very, very helpful.
In your observation of investors, what do you think is the biggest mistake that average investors make?
Selling at the wrong time.
And they sell when the prices go down?
Yes.
Or
yes. Not keeping, look, people have conviction, or they invest for if they invest for the right reasons, just keep at it.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
When Jack Hartung joined Chipotle 20 years ago, it was far from the powerhouse it is today.
Chipotle was a special brand. It was an unknown brand. It was very small.
Founded in 1993 by chef-turned-entrepreneur Steve Ells, the company stood on the brink of the growth spurt that would create a category, fast casual dining.
It was a really simple idea Steve had. It was, look, why is fast food crappy? Why can't great food be done fast?
I was there when there was just a couple dozen restaurants, and I would visit restaurants like this where Steve would go behind the line and he'd see somebody cutting an onion and saying, well, hold on, let me show you how to do it.
2 decades later, Jack Hartung is still the chief financial officer of Chipotle. He's had a hand in just about every area of the operation.
I feel like I've always been able to dabble in things outside of just financials.
And while his central task is to create greater value for a chain that now has about 3,000 restaurants, he insists on staying true to the values that have defined Chipotle from day one.
I think I'm really open-minded, but I really do want to protect the heritage of Chipotle and make sure that we don't lose the essence.
It's a powerful blend, a consistent mission that sustains the brand with a commitment to innovation that drives the business. Chipotle's future depends on investments that address both priorities. Jack Hartung embraces that challenge.
He's always had a passion for what we do next at our company because he's always been really a champion of growth.
I've got to make sure that the financials, the balance sheet, the way we source food, the way that we provide food, the way that our business works, needs to be strong so that we reach our full potential.
I love working with people that can figure out how to thread the needle between the numbers and the purpose. Frankly, not everybody can do it, but luckily Jack does it really well, and we're pretty fortunate to have him at our company.
Chipotle's growth in the last 5 years has been nothing short of spectacular. Revenues have jumped nearly 70%. The company's market capitalization has more than quadrupled. All this despite a global pandemic that's disrupted the restaurant industry. And all this following a food safety crisis that caused sales at the company to crater and forced a shakeup in the C-suite.
Individually, the team was phenomenal. Individually, people were very talented. But it's almost like they didn't have the right people in the right places to handle how big the brand and the platform became.
The enhanced food safety procedures, enhanced standards, and training, they really enhanced the management team, took marketing dollars, transitioned them to more effective marketing, brand building efforts with a big focus on reminding consumers of why they love Chipotle.
The breakdown was the human capital. The breakdown was in culture. And that's what they've repaired. And that's why they're coming back stronger.
What have you learned in your CFO position going through those crises? Which one was the most challenging?
The food safety issue was the most challenging because we were alone in that one. That was unique to Chipotle. The pandemic is certainly a challenge, but everyone's in it together. The things that really got us through it is we stayed true to our purpose. So during each of these challenges, we made sure we invested in the things that made Chipotle special. Invest in higher quality food, invest in our people, and then invest in our growth and invest in things like technology.
We have this saying around here, I think it actually comes from West Point. You know, we will choose the harder right over the easy wrong.
How do you and Jack work on things like that? Those black swan events, those things that can be, fundamentally changing for you as a company?
When we are successful in focusing on the really important things that can strategically drive growth for us, they seem to be having resiliency in these unexpected events.
And the other thing I think is to make sure you have a strong balance sheet to make sure you can weather the storm. And we've had a strong balance sheet. We've never had debt. We've also always had more cash in the balance sheet than we need for our normal ongoing business. And that has come in, great, really handy.
Chipotle carries no long-term debt, and its free cash flow almost tripled in 2021.
When you think about the future, how do you take advantage of this? And what is the flexibility that enables?
What it really affords us is we're going to be able to invest in our future no matter what. Like we accelerated our pursuit of new restaurant sites during the pandemic when some of the restaurant companies were laying off their development teams.
Chipotle not only expanded its footprint over the last 2 years, it reshaped its restaurants. A venture into drive-through dining that began several years ago became a thriving profit center when the pandemic struck.
The thing that's changed the most is just most of our restaurants now have a Chipotle. So 3 years ago, we had maybe 5 or 6 Chipotlanes, and now we have over 350, and 80% of our new openings have a Chipotle. The sales in our Chipotlane restaurants are higher, and our margins are higher too, because the digital orders are our highest margin transaction. And when you can serve the customer through the Chipotlane without the delivery fees that we pay and the customers pay, it's a great margin opportunity for us.
The convenience of Chipotlanes contributed to soaring digital sales in 2020. There was little erosion in 2021, even as in-restaurant sales returned to 80% of 2019 levels. Meanwhile, membership in loyalty programs has boomed, giving Chipotle valuable insight into its customers' omni-channel preferences.
What we've seen is that our digital customers, they come the most often and they spend the most each time they come.
Customer loyalty could face a test if inflation continues to push higher. Chipotle hiked menu prices roughly 9% in 2021. Jack Hartung says it's not just wages and food costs that are putting on the pressure.
It's hitting everything. It's hitting materials too for our restaurants. Our new restaurants are costing more as well.
You guys have had incredible pricing power.
Yes.
Is there kind of a tipping point where it's like enough?
We haven't seen it.
Why is that, Jack?
Well, part of it is we've, over the years, been slow to raise prices. We've always tried not to go to the menu board to raise prices whenever we've had a challenge from a cost standpoint. We'll do other things to try to find efficiencies somewhere along the line. We raised prices in the second quarter of last year. We did that just to cover the cost of raising wages. We raised wages up to $15. It was an average of 15% increase. And we raised prices just to cover the dollar cost of that. So we didn't increase our margins. Our margins actually went down, but our profitability stayed the same. Our customers actually said, we really applaud what you're doing. We're fine with a 4% price increase. On a chicken burrito, that's 30 cents. But the fact that you increase wages to that extent, we like you even more, Chipotle.
CEO Brian Niccol has warned that Chipotle may raise prices again if cost pressures intensify. With the cost of eating out already at historic levels, consumers may just have to get used to paying more.
The industry is used to tepid inflation, call it 2%, level of inflation. They take, a little bit of price to offset. It flows through and margins are just naturally restored. The fact of the matter is labor was the pressure point. So the industry today is definitely sitting on a high single-digit price versus what is typically a low single-digit price inflation or level of menu price increase.
In relative terms, everyone has to do this. In fact, I would say, Carol, we could be more patient than others because we own all of our restaurants. When you're a franchise organization, when you have franchisees that have borrowed to invest in their business, they can't necessarily afford to let inflation eat away at their ability to pay the debt for very long.
It is full speed ahead when it comes to store growth. Chipotle just upped its goal to 7,000 from 6,000 restaurants in the U.S., thanks in large part to strong performance it's seeing in smaller towns.
Based on, we're already in more than 100 of them. Based on the ones we're in, based on the results so far, which are extraordinary, we think there is as many as almost 1,000 more restaurants. So even though you're talking about a small town with, maybe 20, 30,000 people, the sales volumes are almost the same as if you were in a city like Chicago or a Chicago suburb. But the investment costs are lower, the rents are certainly lower, and the operating costs are lower. So you end up getting higher margins and higher returns.
Chipotle reaps the full benefit of these returns since it owns and operates all its stores, an advantage that's not lost on Wall Street.
It's extremely unusual in not only restaurants, but from a restaurant stock perspective, to have a large cap stock that's growing its unit level economic model, meaning the revenues are getting better and the margins are getting better as growth is accelerating. It's like almost unheard of.
So there's little reason for Chipotle to begin franchising in the United States. But for the chain's 45 international restaurants, Bloomberg Intelligence notes that partnering with local operators overseas might boost margins and accelerate expansion.
We're open to the idea of some kind of franchise model. There are areas of the world where it's going to be harder for us to own and to run the businesses ourselves. We're in the process of bringing our digital system to Europe. That's going really, really well. We've also opened up some alternative sites. It gives us great optimism that international is going to be a growth vehicle for us in, hopefully not too distant future.
Coming up, Jack Hartung shows me around one of Chipotle's newest restaurants, and he explains the economics of menu innovation.
When you bring something new, does it bring in additional customers? Does it bring existing customers more often?
This is Bloomberg.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now. Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Like Chipotle's menu, Jack Hartung's professional resume isn't padded out with exotic ingredients. After earning a bachelor's degree and MBA at Illinois State, he went straight to an accounting job at Coopers & Lybrand. His next stop, 18 years at McDonald's.
They called me up, and McDonald's was just a few miles down the road, and they said, this place is great. And what they told me was great about it was you start in one area, but then when a job opens up, they would post it, and you can interview for it. So I felt, well, that sounds great. So I can learn a job, and then if I'm looking for another opportunity, I can interview for it. And if I've done a good job, I'll get those opportunities, which is what happened.
I am curious, when you went from McDonald's to Chipotle, were folks like, Jack, here you've got the established company, you're going to a startup. I mean, did people think you were crazy?
Yeah, I mean, a lot of people thought I was crazy. In fact, one memorable person was the CEO of McDonald's at the time, because I had a great career at McDonald's, and the future looked really, really good. At Chipotle, it was in its infancy, and it had this vision for food that was like no other that I've seen.
How much of it was McDonald's owned 90% of Chipotle? How much of it was, all right, Jack, keep an eye on these guys?
You know, that's how it started.
Okay.
And it wasn't keep an eye on it, but it was more, their food culture was very advanced. Their business culture was not. And so it was more of bring some of your experience to Chipotle just so you can get them on a, you know, on a stronger track. Once I got into the Chipotle environment and I realized, oh my God, I want to be part of this. There was a passion about what we were doing. So it wasn't a finance job anymore. It was a job that was really changing food culture in this country. And it was a mission. And it was a mission that I totally bought into.
Chipotle's culture and mission have long differentiated it as a place to eat. With restaurants competing fiercely for employees in the wake of the pandemic, companies are going to have to show that they are great places to work as well.
It's not just about that person coming back to work in the restaurant. They're going to come back, but they're not going to come back and work the way they did before.
I think that the companies that win are those that are investing in their employees, their teams, that are developing a strong culture that people want to be a part of.
The real win on a micro level is if restaurants can figure out how to make that employee work better and more efficiently, but in a way that makes them more satisfied.
At this new location just outside Chicago, Jack Hartung told me what it will take to build a workforce to meet Chipotle's goals.
You've got to start with attractive wages, but then you've got to go way beyond that. You've got to offer developmental opportunities, promotional opportunities. We have 100,000 employees, and as we grow from 3,000 restaurants to 7,000 restaurants, we're going to need 200 or 250,000 employees. So our future depends on hiring great crew today that will be great managers in the future.
Double the locations, double the staff. And along with investing in people, Chipotle plans to invest in technology to support them.
There is so much still that can be done with artificial intelligence, robotics. When you think about our system, there are a lot of processes that, frankly, people don't love doing. Cutting and coring avocados in the restaurant, not a fun job, very repetitive. You know, I think there's a way where we could use robotics to help us do that. And then as you think about artificial intelligence, we could be better at figuring out how many avocados do we have to cut and core today so that we never run out of guacamole throughout the day.
As digital orders have surged, Chipotle has adapted its processes. The most dramatic change has been the addition of a second make line.
This is very familiar to customers, our front line, and this is what, for the first, call it 18 years at Chipotle, this was you come into Chipotle along the line, you interact with the crew, and you customize your meal. We've got this separate make line, and it's digitized, and so the orders come in, and they're really kind of staged so that if you say at noon, I want to come in at 1 o'clock, we hold that order, and we will send it to the crew like maybe 10 to 1,
Right.
so it's ready right when you pull up your car.
How do you manage these kind of two different staffing needs, right? And
Yes.
making sure you have the right amount of people
Yes.
at the right time.
We spend a lot of time projecting sales. A lot of it is, it's part art, part science. We're trying to bring more science and more AI into it. Because if you get the right sales